are listening to The Business Show, and it's our pleasure to welcome, so Mortgage Choice, as you guys, I'm sure, regular listeners are aware that Rob Lees comes in and does the finance segment, but he's sent Tim Hayman up to join us today, and we're going to talk. So Tim's actually the financial planner in there at Mortgage Choice. So obviously Rob has a credit license and Rob actually has a financial planning license. So talks more openly and specifically around investment strategies and the likes, and then Rob goes away and puts those strategies into place. Very generic way to put it, but and also my new neighbour down in Penrith, Tim, is working next door to me with our new shop, so we're all happy down there at the bottom of the hill, aren't we?
We certainly are, yeah. Nice and cosy little space we've got down there.
It is, yeah. We share
you walk out the door and trip over a mortgage broker.
We share the amenities. You've got to laugh. One of my customers went into your office on Friday, I think it was, and they're like, "Oh, is Peter here?" And I'm not sure who they spoke to, and they're like, no, and he's like, and they said, but we can help you. What? And they're like, and he's like, oh, but I've already been dealing with Peter. And they go, oh, if that's the case, she's a very nice lady then. And he's like, she moved in right next door. And they're like, yeah, we know, right? So it was all good fun, because that's how we are all down there. We believe that there's enough business for everybody. And
yeah, certainly.
I think the thing with us is once we get rid of that choice out of our name, then there'll be quite a very distinct difference. Whereas the older customers of mine, they're like, oh, we knew she had choice in her name, but didn't know she was Mortgage Choice. So you might get a bit of that. But anyway, Tim, what are we chatting about? What the markets are up to?
Yeah, just thought I'd cover off what different investment markets did in 2017, and then also cover off what we might expect in 2018 as well for the calendar year.
So everybody get your pens and paper out, take notes.
Yeah, so basically, I mean, it was a very good year for 2017 in terms of share markets, both in Australia and particularly internationally. Balance funds, for instance, for superannuation, or balanced superannuation funds have performed at about 10%. There's been minimal volatility, which is quite unusual since the global financial crisis. We've seen Australian shares up almost 12%. International shares are over 13%.
They're pretty big increases, aren't they?
Yeah, certainly. Wouldn't we love to have those returns every year? So it has been good. I guess the more conservative investments, things like bonds and cash, have been quite low. And yeah, I think that's probably going to stay like that for a little while.
Is that quite traditional as far as if the share prices are higher than is that, or are there still shares?
Yeah, that's right. And we often hear, the importance of diversifying your assets and superannuation and things like that, and that's part of the reason why. But I guess this year, I mean, everything has been, the returns have been positive for all asset classes, which is a little bit unusual. But as I said, the growth assets have far outperformed the conservative ones.
So when you say growth assets, is there a specific kind of class that you're referring to there for those that don't quite get that?
So like a growth asset would typically be things like Australian shares, international shares, and listed property. If we're thinking about your superannuation, for instance, they're the typical growth classes that you can invest in with your sort of average type super fund.
Yeah.
So and then the other, when you're looking at the conservative, it would be things like Australian bonds, international bonds, and cash.
Yeah.
Okay.
So they never traditionally perform excessively high because they're
they're less volatile, which generally means that the returns are usually lower.
Yeah.
Although, funnily enough, if you look over, say, the 30 years up until the 30th of June 17, Australian bonds performed really well.
Right.
So they were one of the best performing asset classes. So yeah, it's they can provide some decent returns.
Yep.
But typically,
it's a bit more of a safe investment. Is that what you?
Yeah. So obviously, cash is your safest investment. Although,
what's cash?
Yeah, these days I don't know. What's your prediction on the Bitcoin? Should we be investing in that?
Well, I wouldn't recommend it, and I'd probably lose my license if I did. So I'm not going to go into the Bitcoin discussion.
But you were talking about super before, and a lot of people listening to this program, like us, own their own business. So, most of us are putting money probably into the business. So why should we come and see a financial planner?
Well, I guess from a self-employed perspective, if there's some cash flow there, number one, the contributions that you make are tax deductible. So often if you're seeing your accountant before the end of the financial year and if the business is in a pretty good position, they'll be recommending to put some into super. Longer term, when you do retire, superannuation can be a tax-free environment. Okay, so when you're starting to draw an income from it, you're not paying tax on the income that you're drawing, and the earnings within that fund's tax-free as well. So the 0% tax environment's pretty good. But totally. Obviously, with self-employed people, obviously investing in the business, that's.
Yeah, but I think it needs to be one key element to your strategy long term, because whilst I guess if you're starting up the brand new business, then all of your cash flow is going to go into that. But I think it's something that should definitely be on your radar as part of your planning in your business world, because there should be a time when you actually are contributing into your super, because you do need to think of that long-term asset.
Yeah, it's certainly right. It'd give you a little bit more flexibility in the future,
but a
potentially.
lot of people think that their business is their retirement. That would be a lot of people's thinking.
Yeah, it would be. And I guess, but if you can think about diversifying away as well and looking at your super as part of your overall retirement plan, it doesn't have to be all of it, because your business can come into play there too. For those tax reasons, for instance, that I just mentioned, and it's a liquid asset as well. So, they can work together for your longer-term retirement plan. And there's other things too, probably for another segment potentially, about what small businesses can do if they want to sell their asset. When they retire and getting some of the proceeds into super, there's some concessions there as well too. So it's probably for another day, that one.
Yeah, but I think that just highlights the importance of having someone. We've spoken a lot on the show today about, leaning on other professionals for their opinion and guidance. And I think financial planning is definitely one of those things that I don't disagree with you, Catherine, that your business is, and it's your life for probably a large portion of your working life, and it should go into that thought process. But I would be encouraging business owners to think about what is that, if you're early 30s and you're setting up a business today and you think that that's going to be what you're going to sell when you're 60, when you retire, look at what's happened in the digital world. A lot of businesses cease to exist. I mean, I had some relatives that owned a CD shop, and they were very well set financially, and now they live in one of those retirement villages, things that they don't even own the land that the property sits on. And so I think that it's back to your point, Tim, around that diversification. I think once you've got your business established, it's really important to be chatting with people like yourselves to understand.
And also, lots of people, Peter just made the point of 30, like lots of people think, I'll go and see a financial planner as I'm retiring, which is
too late.
The worst.
Yeah, and we definitely see that a lot.
It's not too late. It's never too late.
It's never too late,
No,
but you can certainly,
ultimate.
they'll say the earlier you plan, the better position you can be in the future. So, and I guess the other thing too, getting back to self-employed people, is often their business structure can change over time, potentially as the business grows. So they may end up going under, say, a company structure, and they've got to start paying themselves super
that's exactly
as well.
right. So what do you think what's your prediction? What's the
cryptocurrency? No.
What's the crystal ball tell us?
Anyone's guess with that one. But 2018,
Do we need a
I think
disclaimer
we're still
for you
going to see
first?
some positive returns from those growth assets, although probably not to the extent that we've seen them. There might be, for 2017, there's probably going to be a bit more volatility as well. We've seen in the US with Trump, he's sort of put into place already his tax reforms and the business-friendly reforms as such. Whether some of these more controversial ones are raised throughout the year, who knows? But North Korea as well, if anything kicks off there. Just things like that. That might lead to a bit more volatility. So, but no one's got a crystal ball. And that's what it comes down to as well. So I guess with talking about investments, it's great to sort of predict what could happen in the next 12 months. But, I mean, there is an element of uncertainty and unknown. And I guess that's why it's really important to sort of make sure you've got an investment strategy for the long term and stick to it. Don't listen to a lot of the noise that you can hear in the media. If you're unsure, get guidance by someone such as myself, financial advisor, because that's the really important thing is to stick to your strategy and not follow the herd necessarily.
Don't panic.
So Bitcoin, getting back to it, it's a herd mentality we're seeing at the moment, and I think that's probably going to
people
come
should
unstuck.
Focus
I
more
don't
on their
disagree
social
with
media
you,
strategy.
but I think the way in which we do business, like, I'm not saying it necessarily Bitcoin or cryptocurrency, but I do think there will be new ways over, the coming years that may have that opportunity.
Oh, certainly. And I think even, like the cryptocurrencies is probably, we've talked Bitcoin briefly today, but there's other cryptocurrencies that are coming out there. But they're impossible to value. They don't provide a level of income as such as well. So there's such a herd mentality to it as well. The volatility that you see with it.
But it's such a good idea to have something that is a one set. Because I used to hate having contracts in US dollars and then each month it being a different, because as it fluctuated.
I mean, I'm not an expert in it. We're not allowed to provide advice on it. So, it's been hard for me to comment on it. I get the questions a lot from clients, but it's outside of our space. So, but certainly I do have an interest in it in terms of what it's doing, because it's, we haven't seen anything like that for a long time.
No, ever. I don't think. Something that...
Dutch East India Trading Company was probably the one before.
So, Tim, I guess just to recap, so the importance is really about having a strategy, more so, and having probably someone in your pocket that actually looks after that strategy for you and keeps you accountable to that. So if any of our listeners were sort of thinking that they probably should connect up with you and have a chat, where's the best place to find you?
Well, I spend my time between our Blaxland and Penrith office, so it's probably best to contact our Blaxland office, which is 47399749. If I'm not there, then
they'll find you. They'll track you down.
That's exactly right. So
perfect. Thank you so much for coming in, standing in for Rob.
Thank you.